Hello and welcome back to another episode of Investing Deplorables. My name is Jake, and today I'm here to speak with y'all. There's been some pretty interesting news coming across our CNBC here lately. We've seen that the Federal Reserve is holding rates at a steady pace, so we've seen our real estate investments kind of not take such a bad beating to that. The market didn't seem to hate that too badly, so we might be seeing a little bit of growth coming from our real estate investment trust now. There is some very interesting things that I wanted to cover though in our news today. As you can see, if some of you guys have been maybe listening to some other YouTubers or maybe checking our recent interview that we saw with Jim Cramer on Starbucks, we saw that Starbucks is taking a really big hit. So we are potentially maybe in a caffeine bubble if you go off of what Joseph Carlson says. For any of those of you that haven't seen Joseph Carlson, that is probably one of my favorite YouTubers. And so, if you saw the interview with Jim Cramer and the Starbucks CEO, there's many ways you could argue that. But I just wanted to cover this today because in the investing deplorables portfolio, we have our position here in Dutch Bros Coffee, and so I think we might see a little this investment take a little bit of a hit here. In fact, it has gone down here recently since I've invested in it. And actually, we might even be in the negative. So, yeah, we're currently sitting at a negative of 2.77%. And so, this is where we got to sit here and ask ourselves, guys, are we going to panic? Are we going to freak out and sell our shares of our Dutch Bros because there's potentially maybe this caffeine bubble? We've seen Starbucks take that really big hit. Uh, for me personally, guys, I don't see a problem whatsoever with this investment. I think I'm going to just remain invested in this stock. The company is doing some great things to promote that growth. They've talked about, if you guys had the chance to listen to their last quarterly earnings report, they are seeing significant growth, guys. Honestly, if you ever want to, if you're bored, you should take the time to listen to that quarterly earnings report, the most recent one that Dutch Bros had. That was probably the most exciting quarterly earnings report I've ever listened to. Like, you can just hear the amp from the CEO and from everybody that's on the board giving the presentation for that earnings report. So I think this is a very exciting company for us to be invested in, guys. There's a lot of growth ahead of this company still, in my opinion. And it'll be very interesting to see if this company is going to be in the same type of trouble this next quarterly earnings like Starbucks is. But honestly, guys, I think with some of the things that this company is doing, I do feel that it probably isn't going to see such a bad hit as our other companies. If you take the time to listen, they have a very loyal base of customers that are using their loyalty program. I think it was about over 60% of their customers are on this app and are using it. Another thing, guys, that I think is going to give this company that special edge is they are intentionally making coffees that are specifically cheaper than the prices that you see at Starbucks. Guys, Starbucks is probably also taking a hit because you got to think inflation has gotten really bad. And Starbucks was very expensive to shop with even before inflation got hectic. So I'm sure Starbucks has seen quite a few of their customers starting to not come in and visit the stores as often due to high prices. And so this is kind of what makes me very excited about the Dutch Bros coffee is they are trying to make these specialty crafted brewed drinks, but also intentionally trying to make sure that they're offering a valuable price for that great cup of coffee, for that luxury coffee. So anyways, guys, that's just kind of some of the news that I wanted to cover today. And if we come up here, you can see in our portfolio, we are still sitting around that $2,500 range area. I am up a little bit in the last week by about $40, but we are still kind of sitting in that 2,500 mark. If you guys remember, when I first started this channel, we were sitting at about $2,300, and then we saw that stock market rally that we had in the last few months, to where we got up to about $2,500, and now we kind of see it starting to taper off a bit since the Federal Reserve is undecided about if they're going to raise their interest rates. At least that's what we're thinking is the reason why we're not seeing the bull market that we were just a month or two ago. So, anyways, that's it for the coverage of our news today, guys. And so I'm still sitting here trying to decide if I want to buy our uh, our Core 7 ETFs, or if we're going to possibly go into a few other new ones. I did add $10 into the portfolio this week, and so we'll go ahead and buy our traditional ones because we do know the goal for this year is to get up to $2 a month in our JEPQ and JEPE. So with these ones, we will go ahead and put $2 each into these shares. Whoops, into these shares. So we'll just do $2 for JEPQ. And here soon, guys, well, I believe next week we'll probably have an idea of how much we're getting in dividends from these two ETFs because it is the beginning of the month of May, and JEPE and JEPQ usually do their distributions in the first week of the month. So, but let's go ahead and take our JEPE. We're going to go ahead and put $2 into that one as well. And as you can see, guys, I've got about 2 minutes left before the market closes, so I'll have to be somewhat quick here. Those are the two ETFs that I wanted to buy. And as you can take a look here, guys, our QQQ investment is selling under the initial average cost that I bought it at. And you guys know how much I love buying stocks when they're selling below what is considered profitable. So we're going to go ahead and stick $1 into this one as well. All right, and that's it for this, guys. Now, if you guys maybe remember, I was doing regular option trades in the market, and so I have sat and thought about it for a very long time if I wanted to do uh, option trades on our Ford Motor investments. The weekly payouts on that would be a pretty nice premium. Uh, However, one of the things that made me a little bit concerned about investing in this stock is the fact that we have seen quite a few companies that with layoffs of jobs. So I mean, there is a potential that we might see some type of minor recession. Maybe I don't think it's going to be a huge recession, but I do know that job losses does tend to spook the stock market and make people sell off. So if we saw that, and I'm selling cash secured put options on our Ford Motor, I could make our stock crash significantly below what we're selling our options at. But if you notice, guys, I noticed that this stock does rebound pretty quickly. So I have decided that we are going to start doing option trades on Ford Motor. So let's go ahead and find our Ford Motor position. As you can see right here, guys, it's selling for $12.48. So let's go ahead and see what selling a cash secured put is going to be if we go to the month of May. So as you can see here, guys, if we do an option, oh, I guess the markets have closed. It's 2 o'clock now. Okay, well, we won't be doing any type of option trades for today, guys. Come back in next week or possibly Monday, actually. We'll go ahead and make a decision on Monday and see if we're going to be doing any option trades on this stock. I do think we're going to go ahead and do it, guys. I do see that it does pay a very nice premium each and every week. So, but that's it as far as our Ford Motor goes. Let's go ahead and take a look at our overall performance of the portfolio. As you can see here, guys, we're sitting at 22.12% for the past year. Let's take a look at where the our SPY or S&P 500 ETF, where is that sitting at? And that's going to be sitting at 21.83. So we are just barely outperforming the stock market, guys, once again, which is kind of where my portfolio has been lately, just about 0.5% ahead of the market, which isn't very much. But I mean, that's at the same time, though, we are still outperforming the pace of inflation when it's at that rate. And I mean, that's always kind of nice to know that you're outperforming the stock market as well. So, but that's it for this week, guys. Thank you so much for watching. Please comment down below and subscribe to the channel if you are new. And if you disliked this video, please hit that dislike button and let me know why you disliked the video down below so I can work on making better quality videos. But that's it for this week, guys, and thank you so much for watching. And in the meantime, take care.